We start to
Good afternoon, everyone. It's a real pleasure to welcome you all to this timely and important webinar, proudly hosted by EcoBank. My name is Uju Okeke, and I'll be your co-host for today's session. Thank you for joining us. Today, we're diving into a topic that couldn't be more timely and relevant: building wealth and staying ahead beyond 2025. As you all know, we are living in a time where the only constant seems to be change, from currency fluctuations to inflation spikes, market instability, and continuous shifts in global economies. The financial terrain is more complex than ever before. Across the globe, people are being stretched. People are grappling with uncertainty. Plans are being postponed. And yet, amidst all of this, there remains a golden truth: only those who are prepared will thrive. That's exactly why we're here today. This webinar isn't just another event, it's part of our broader commitment at EcoBank to empower individuals and businesses with the tools and insights they need, not just to survive the times, but to grow through them, to make smart and intentional financial decisions that set them up for long-term success. We've brought together expert speakers who will not just share insights, but practical, actionable strategies for navigating the evolving financial landscape. Whether you're looking to grow your income, build sustainable wealth, or simply make informed financial decisions, you're definitely in the right place. To our incredible guest speakers, thank you for being here and for carving out time out of your busy schedules to pour knowledge into this space. And to our guests, thank you again for being here. I encourage you to engage, take notes, and make the most out of the time we have here together. Now, to kick off things formally, it's my honor to invite a key leader whose work consistently reflects EcoBank's vision for inclusive and future-forward banking. Please join me in welcoming the Executive Director of Commercial Banking, Mr. Kola Adeleke, as he delivers the welcome address. Sir, over to you.
Thank you so much, Uju, for that very good introduction. Good afternoon, everyone, and welcome to this webinar, Building Wealth and Staying Ahead Beyond 2025. I think this is a very important webinar that I don't know how many of us are already in. I could see 109. I think I will encourage, please let's try and get in as many of our colleagues in because this is something that will be quite beneficial to everyone. I recall I had an opportunity of attending, a workshop organized by International Financial Planning Institute some years back, and that has actually transformed my view and perception of the topic of this webinar. I listened to someone over the weekend, a video, and basically talking about wealth, building wealth. And it made us to understand, or what I learned from it, which I would like to pass on as a welcome address. Four typical things. Number one, that wealth is not just financial. There are so many aspects of wealth, but I think we have very reputable speakers that will be talking to us today. I don't know which of those aspects they'll be talking to, but we just need to take note of the fact that we have social wealth. Social wealth basically talking about our relationship capital, the need for us to get close to build quality relationship with people, and ultimately those relationships should be able to translate into wealth for us, because They say that our wealth, our network, or our net worth actually determines our network determines our net worth. We will talk about the second wealth, type of wealth, which has to do with time. Many people don't know it, but time is wealth because with time we enjoy freedom, and the freedom, helps us to find time to rest. It helps us to live, to love, and to enjoy, everything, whether human or non-human, that we have been endowed with. And then we have physical wealth, which has to do with our health, how we take care of our soul, our mind, as well as our, as well as our body. But finally, is financial wealth, financial wealth. So, building income, stocks, bonds, so many things, properties. So, but I will not want to take the job of the guest speakers. We have very solid, reputable people who will be talking to us today. So, but I welcome all of you. Please take as much note as possible, but more importantly, please try and put them into action. That is the only way you can build a wealth that will endure even beyond this year, 2025. Thank you so much, everyone, and welcome. Uju, over to you. Thank you.
Thank you very much, sir, for that actionable welcome address. Thank you so much. Now it's time for us to get introduced to our first speaker of the day, who is no other than Olukunle Ezon. Kunle, fondly called Kezon, currently serves as the head research and business development at Ecobank Nigeria. Kunle holds a BSc in economics and an MSc degree in economics, majoring in monetary economics from the University of Lagos, Nigeria. He is a financial market expert with over a decade hands-on experience in macroeconomic theory, monetary economics, fixed income and currencies, FICC. Over the years, he has grown and evolved with the financial markets with a demonstrated history in involvements in several market development initiatives, which are the establishment of FMDQ, unbundling of Financial Markets Association into work groups, and many more. He has also leveraged on his background in macroeconomic theory to develop skills and competencies in research, strategy, business development, and training. Kunle Ezon is a regular guest on national television stations like Arise TV, TVC, and other web-based networks. He has also featured in most national dailies like The Punch, This Day Newspaper, Vanguard Newspaper, Bloomberg News, Reuters News, The Nation Newspaper, and so much more. He has contributed on macroeconomic and treasury-related issues, focusing on budget review and analysis, monetary policy review and analysis, fixed income and currencies. Kunle is a fellow, Financial Markets Association of Nigeria, FMDA. Ladies and gentlemen, please, let's make a digital welcome for the one and only Olukunle Ezon, popularly called Kezon, as he makes his presentation titled Stay the Course, Nigerian Economy at the Point of Inflection. Ladies and gentlemen, please, a digital welcome.
Yeah, thank you very much, Uju, for that intro. I'm quite glad that it was done that. Okay, let me welcome everyone from wherever you have joined this webinar and wherever you're listening to us. I bring greetings from Ecobank. We pride ourselves as a banking group, another group of banks, and we count in countries and not in branches. So my job today is quite straightforward, and I did ask myself, why is this webinar happening now? Is it a coincidence or is it just divine? Because we're at a time when the world is witnessing a trade crisis between two major economies, that's China and the US and other minor countries. Well, again, I will try and make it as brief as possible. So my job today is very straightforward. I'm just here to point us to those opportunities that are in the market so that we can follow the opportunities and make money. So my slide again is titled "Stay the Course: Nigeria Economy at the Inflection Point." But if I take a very deep dive into the slide, there's a call to action. There's a call to action, and I want to charge us to say, my first slide here, perhaps, is a thing that resonates with every one of us. It's a slide that illustrates and depicts who we are as individuals, right? You can just situate yourself within that slide to say, oh, someone is earning $1, and it thinks that, oh, okay, I will change this dollar into local currency. And once the dollar is changed into local currency, I can use it to invest, either in a short-term instrument or a long-term instrument, right? But the basic fact is to say the money is working for that person. So the call to action today is, our money working for us, or we are working for the money? So the essence of this webinar today is to charge us to that fact to say, let our money work for us. Are we fully deploying the money to work for us? So my next slide here again is a call to action. And in 2025, in every month in 2025, an average of 1.9 trillion is coming to the market in terms of coupon payments on government security, in terms of maturity. So the question here is this: how much of this money comes to you? So are you an investor that is earning returns on your investment? So if in every month of this year, 2025, about the average of 1.9 trillion comes to the market every month, how much of that comes to you? How much of that do you earn in your investment? Do you have investment in Nigerian Treasury bill? Do you have investment in bonds? These are sovereign investment that are yielding good returns. So today, my charge is to you is to say, are you fully deploying your resources? Are you making money? Is your cash flow well straightened out? So these are the call to action today that I want us to focus on as we move on in the presentation. Again, I'm sure we are all aware of the fact that government in 2025 is budgeting about the 54 trillion expenditure. But that is not our concern here. The concern is to say, in this 54 trillion budget for 2025, about 13 trillion is set out as deficit. So government is saying, I'm going to come to the market to borrow about 13 trillion from you and I. So what is the outlook? What is the opportunity that we see in government coming to borrow? Do we expect that the yield on government security will continue to rise? Or do we expect that the yield on government security will drop? My job today, like I said, is to point us to this opportunity, and now we're ready to take this opportunity. So it's a call to action to every one of us. Are we fully deploying our resources? Are we taking opportunities? And are we following the money? Where are the money going to in 2025? And how position are we to take this opportunity? So as I take a deep dive, please join me as we move along. Again, I'm sure we are all aware of what is happening globally, right? Is a year, is a month, is a season of tariff. And the US president has just shown to the world that US could cause a crisis in the economy. So what we have seen since the beginning of March, we've seen tariff being applied, being deployed across major countries. But what major is what happened on the April 2nd, when there was what we call a reciprocity of tariff across the country. Nigeria is not left out in that respect of tariff. This Nigerian scenario, I try to create a scenario for Nigeria here, right? The export that goes from Nigeria to US is about $10 billion annually, right? So what goes to US from Nigeria is about $10 billion annually, right? And this is majorly crude oil. 80% of that export to US is crude oil, right? And what comes to Nigeria in terms of imports from US is about $7.5 billion every year. And so US is saying, in terms of deficit, right, Nigeria is earning more from us, right? And again, US is saying that Nigeria plays about 27% of tariff on import from US. So when we import Tukumbo car, when we import other motor vehicles from the US, Nigeria places about 27% on US import. So what US has done now is to say, oh, in reciprocity of what you've done to us, we're going to place a tariff of 14% on you. So today, if someone in the US is buying Nigerian crude before now at $100 per barrel, today it will be paying about a 114 per barrel. So that's the major issue. So that is the issue that we are facing today. So what does this mean to Nigeria? And that's why when this happened on the 2nd, by Monday on the 5th, Monday 7th, we woke up to more of a run on the market. There was panic and there was a sell-off. Why? One is because whatever US is doing today make Nigerian crude less competitive. So if you are a consumer of Nigerian crude, you begin to look for alternative, but now it becomes so expensive to buy. So you begin to look for alternative. So that what happens to Nigeria. It means that there will be less received from oil. So this is what happened. And so in response to this, FPIs that were holding Nigerian security believe that once the mainstay of the economy, which is oil, is being hit, then there could be a run on Nigeria. So there is a capital flight. So what we have seen the last 2-3 days is a sell-off, both in capital markets and in physical market. So today, the currency is doing about a 16.45 to a dollar from a level of a 1500. So give or take, there is a dip of 100 naira on the currency between what happened last week, Thursday, and Monday. So there seems to be a run on the market. And that's where we are. So there's a dip now. So someone was asking me, which I'm going to talk to in my slide, that what do we expect to see? So I move on quickly. So in all of that, 3 issues come to mind, which is inflation. What happened to inflation rates? What happened to interest rates in Nigeria? And what happened to exchange rate in Nigeria? And because we are all exporting, so the fourth price becomes very important to us. That's the oil price. Today, as I speak to you, there's a run on the on crude oil price. Brent is doing 61%, $61 per barrel, right? And you remember that the budget benchmark for 2025 is placed on $75 per barrel. So there's a problem. So there's a differential between what Brent is doing today at $61 per barrel and what our budget is benchmarked on at $75 per barrel. So what does it mean to the Nigerian economy? It means that there will be less receipts that support the economy. So you can see why we need to start thinking through what could happen if Trump's and his policy are not quickly addressed. So again, looking at, my thought is that inflation will remain a phenomenon, right? You know, in December, it was about 34.8, right? But today, as we speak, there's a reduction in inflation rate. What we have seen is more like a cycle-driven inflation rate. Today, we're at 23.18 as of February. But people ask me, there's a major jump from 34 to 23. But we're not seeing that happening. So price of goods are not reflecting what we have seen as a reduction in inflation rate. Yes, my response to this is this. By assumption, what happened psychologically from reality, right? In reality, what we have seen is a cyclical reduction in inflation rate, but it's not driven by fundamentals. So those legacy issues are still there. Food inflation remains a major problem for us. And again, the pass-through effect from exchange rate, again, is a major issue. That is true inflation. So give or take, we may not begin to see the impact of that rebasing that happened in January. But sooner than later, when we begin to see the impact, when we begin to see that reduction in food inflation, then we can begin to see that impact. But as I speak to you today, whatever we have seen in inflation is technically driven and not fundamental. And that's why it does not cascade into food prices in the market. So I move on quickly. Again, interest rates, right? Interest rate, just this morning, I was just telling my colleague to say, look, I do not think that rate will come down so soon, right? Because if the crisis that had happened on the trade side continue to happen, the possibility of the central bank reducing MPR for 7.5 is very slim, right? Again, because FPIs are dumping Nigerian security, right? Both at the capital markets. For the first time in 3 months, the all-share index dropped very significantly on Monday, and it's still happening. So the response from foreign investors is that this is not the best time to own Nigerian security. So what happened? Well, the central bank needs to find a way to keep the FPIs in the market. And that's why I think that rate on government security might begin to look up again, right? Because government needs to keep the FPIs here, right? So that's a major issue that we need to begin to look at. So if you are an investor, what are the opportunities that I see? I'll tell you that if you are the type that buy the dip, you might want to play in the capital market, right? But if you are the type that want to play in the physical market, invest in government security, invest in treasury bills, I want to say that it might be time for you to begin to think around that corridor. But the yield is not going to coming down yet. So my shout to you is that are we ready to follow the money? Are we ready to follow where the yield is? So I would say that it's good to put your money in government security. So I move on quickly. So someone asked me on Monday to say, oh, is Naira going to tumble again? And I said, the way it is, it might. But what the central bank has done, troubleshooting, is to say, oh, we recognize the fact that, yes, there is a global crisis, a trade war brewing between the two major economies, US and China, right? And there is strong possibility that this will have impact on the margin and frontier market like Nigeria. And that's why we see the sell-off of the Nigerian security, and it's having major impact on the exchange rate. Today, like I said, we had crossed the Rubicon of the 1,600 to $1. So my thought is this: Naira may tumble, but not as aggressive as it was last year. So my projection for what I have done is that in Q1, in Q2, we might see a Naira trading at 1696 to $1, right? Because we need to be able to properly dimension what is happening, right, in the global market. And if the sell-off continues, it will have a major impact on exchange rates. So you expect that exchange rates might continue to depreciate. But the good news is that we may not see the low of 1.7 to $1 or the low of 1.8 to $1 that we saw last year. So my shock to us is to say this is not the time to short the currency. This is not the time to short the currency, because we've got the dip. The currency has not bottomed out yet. So I would say there are opportunities to go long, depending on when you think you can hold. So what is at stake today is how long can you hold? What's your propensity to hold the currency, right? So rate today, like I speak to you, is around 1,600, and the amount calculation, we might say 1,696 at most in Q2. Subsequently, when things begin to simmer down, we could start coming down to a 1,585. But in Q1, between now and June ending, like I said, to see volatility in the exchange market that could take Naira to about 1,696 to $1. So as I close, this is what I see, right? So in closing, I want to say, and this is what I ask you to do. I don't know how you do it, but do we take our time to ask for our bank statement. And when we get this bank statement, what do we do with this? I want to share us today as I close that take a deliberate attempt to print your bank statements and do a careful analysis of how much goes into consumption, how much goes into investment. So how much do you pay on internet? How much do you pay on data every month? Take this charge and look at how much you spend on investments. So if you do this, I'm sure you'll be surprised that a senior part of your income go into consumption. So my job today is to say, we need to redirect that and put more of our money into money-making investment. It is time to invest. It's time to follow where the money is going in 2025. And I charge us to say, please invest properly and invest carefully. Thank you very much.
Wow, awesome. Thank you very much for that wonderful presentation. And once again, Olukunle Eson is the head of research and business development at Ecobank Nigeria. During the presentation, the key takeaway for me is the importance of market knowledge and data, such as the interest rate you mentioned, inflation and the likes, to building wealth. Because I understand it provides that guidance that is needed to help us make informed decisions, which enable us to also maybe assess our risks adequately and, of course, opportunities, especially in the emerging market like ours. So thank you very much once again for that beautiful presentation. To our esteemed clients and customers, I'm sure you've been enjoying this this presentation, this webinar. There's more to come. Please, you can start dropping your questions in the chat box. The chat box is open now for your questions. And also, a feedback form will be shared in the chat box. Please kindly click on the link, which will direct you to a feedback form, and then kindly click it and we'll value your feedback, your contribution. We'll appreciate it. My name is Adekunle Adenibagbe, and I'm your co-moderator for this webinar. Without much ado, we'll be going straight to the second presentation. It's my honor, absolute honor, to introduce the second speaker. Her name is Shola Adesakin. She's a globally renowned wealth coach, thought leader, chartered accountant, and the founder of Smart Stewards Financial Advisory Limited. With over 20 years of experience, Shola has empowered individuals and businesses across more than 40 countries through our practical and transformative Make, Manage, Multiply Money framework. She holds an impressive academic portfolio, including a BSc, an MBA from prestigious universities in the United Kingdom. She is a fellow of several professional bodies, including ICANN, ACCA of United Kingdom, and CPA Canada, and a member of the Personal Finance Speakers Association, amongst many honors, many awards, both in Nigeria and in diaspora. Shola is also the author of 8 best-selling books and a respected member of the Forbes Coaches Council. Her life's work is dedicated to making money less mysterious and spreading financial literacy across the globe. She's very passionate about that, spreading financial literacy across the globe. Please join me to warmly welcome the amazing Shola Adesakin. Shola, over to you, ma.
Thank you so much. Thank you for that very, very warm welcome. I really, really appreciate it. Good morning, good afternoon to everybody watching this. And thank you to Mr. Ezo and Mr. Adeleke, who has gone before me. I'm just here to sort of demystify, some of the things that have been said and see how we can practically, as individuals who are professionals or business owners, how we can apply some of those things. Mr. Adeleke already, spied into my notes because I was going to be talking about, the types of wealth that exist apart from financial wealth. So I'm happy he touched on that already. I wouldn't have to dwell so much on it. And of course, Mr. Olukunle has also talked about some of the things I would have loved to talk about in terms of investments. So I'm just going to ride on what they have done already and, cruise along. I'm going to be sharing my screen, and we'll take this away from here. Just 1 minute, please. Okay. All right. I'm talking about building wealth and staying ahead beyond 2025. Please confirm you can see my screen.
Yes, we can see. We can see your screen. We can see your slide.
Awesome.
Yes.
Quick introduction. The world is shifting when it comes to money. And this is not a time or an age where anybody will say, oh, I don't understand money. When I was in school, I didn't like maths. Things are changing more quickly and faster than we can think. We see AI, we talk about inflation, we talk about digital assets, evolving work models are transforming how we earn, save, and build wealth. In those days, we would say you cannot make money overnight. You cannot build wealth overnight. I agree that you can't build wealth overnight, but you can make money overnight. Literally, people do stuff, sell products, get on social media, they do something, and by the next morning, they are raking in millions. So things are changing when it comes to money. Even money itself is evolving, and we need to bear that in mind. We're in 2025, and just like any typical year, it's not a finish line. Every year is a launch pad for a wealthier, wiser you. So let's go into this presentation properly. What are some of the economic realities to understand in 2025 and beyond? On a personal level, I know that Mr. Izo has talked about national and global economies, but on a personal level, you need to realize that, beyond the money that you make, your skill set is like your income generator, right? The knowledge that you have will determine whether you will shine financially or not. So you need to constantly invest in adaptability and knowledge, financial knowledge particularly, right? At the national level, yes, just like he has said, we need to monitor things like inflation, monetary policies, regulatory issues, stay informed about government incentives, because you cannot, you see, we all operate in three economies: personal, national, and global. Personal economy has to do with things that you do, how you make money and how you spend money. But to a large extent, what is happening at the national level, at the global level, affects your finances. And that's why in Nigeria, we woke up with fuel price at a particular amount, and by the time our new president came in, it had gone up. We don't have control over some of those things, but we must be knowledgeable so that we can take decisions at a personal level. Of course, global level, in the news in the past few weeks or few days, is been, oh, tariff this, tariff that. Some people might say, oh, how does it affect me? It does affect you, right? Currency devaluation, oil prices, tech disruption. So what I'm saying, in essence, to summarize this slide is, you need to become more aware, more interested in what is happening at both national and global levels, because it would affect your personal finance. So gone are the days. Remember when the Ukraine-Russia war started, how it immediately affected everything around the world, diesel price, this and that. Remember COVID, how it literally changed our lives. So those things at both national and global levels affect us. So bear this in mind, and don't think that your ability to create wealth is limited to what you make and what you spend. It goes beyond that. Right, so let's go on. There are 5 dimensions of wealth you must master, and Mr. Adeleke gratefully talked about some of them. Your personal and mental wealth, forming the right habits, mindset, and discipline regarding your finances. Of course, financial wealth, embracing financial literacy. You're doing well. You're on this call because you have seen the need to take your finances more seriously. Accumulate assets. Of course, health wealth. You need to invest in your health, because it is a healthy person that can enjoy wealth, right? Of course, business and career wealth. How to create income, how to innovate, how to expand, how to make more money, whether you are an entrepreneur or an entrepreneur. Of course, social wealth. I do not think that anybody should play or sleep on social and relational wealth. I think our ability to create wealth in this age is very much connected to the people that we have in our circles and what we can do together. I remember, I was trying to do an investment or some project about 2 or 3 years ago, and we needed to pay 200 million within 24 hours. Where was I going to get it? I called a friend, and the friend called 5 friends. And in 1 hour, we raised that money, talking about the power of social work, partnerships. So let's not sleep on it. If you're a career professional, you are in a career, you don't have your own business, you must realize that you are your first asset. The skills that you bring to the table will determine how much of money that you can make. So think like an entrepreneur. And how can you expand your financial wealth? Strategic investments, like some of the things that Mr. Ezu shared with us. You must be interested, because right now, what is fueling your income is your salary. And to be honest, your salary can never be enough. That is the truth. Everybody will do more or do well with more money. So you must embrace strategic investments. You must sort of invest in knowledge. What are the investments that I can do? Oh, am I doing bonds? I'm going to go into that later. Oh, am I doing mutual funds? Oh, am I doing Eurobonds? You must be strategic about it. Even as a career professional, you must be intentional about your partnerships. Right at work, you can form really solid partnerships and you can do stuff together. Are we going to buy real estate? Because listen, we talk about investments and I absolutely appreciate it. But the truth is, you cannot invest beyond the amount of income that is available to you. Do you agree with me? Think and hear about investment from now till tomorrow. Your money, your disposable income will determine how much of investment that you can make. And that is why it is important, whether you're a career professional or a business person, to continue to seek means of expanding your income, right? As a career professional also, remember your personal branding, because what you bring to the table is what determines whether you're promoted, whether you're considered for a higher role and whatnot. But please think about it and find ways of expanding your income, especially through strategic investments, right? For business owners who are on this call, realize that beyond your hustle, beyond your business, there can be more. So build structures that scale for your business. For business owners, I think we need to go beyond, just doing our businesses for, survival. When you go overseas, you see businesses that have transcended the first generation owners, second generation owners. And I'm hoping that in Africa, in Nigeria as well, we can continue to build businesses like that. So we must see our businesses beyond, it's a side gig, it's just a hustle. We must build structures and see businesses that we can pass on to the next generation. So see your business as an investment for business owners. Apart from your business, have diversified financial investments. COVID showed us this. When in COVID, those who were in the tourism business, nothing was happening. They literally had to close shop. And some of them, all of the monies they had in their life was in that particular business. So if like COVID happened and there was nothing they could do, they didn't have money anywhere. I tell business owners, beyond your business, diversify your profits. Don't say, no, bonds and mutual funds. That's not for me. My business is all I have. Things can happen. Policies can change. And your business that you think is a cash cow will then not become a cash cow again. So learn to diversify from your profits and all of that. As business owners too, we must consider strategic partnerships. So let me run to build wealth. We are here talking about how to build wealth in 2025 and beyond. There are 3 things you need to do to money. Make it, manage it, multiply it, rinse and repeat, whether as a professional or as a business person. And I'm quickly going to talk about how to make more money. As career people, yes, we are working for an organization. Most of our time goes into it, which is fantastic. Listen, I'm not one to say, career professionals, the stability of your salary is an advantage. Don't take it for granted. Because I live in a world where those who are career people are looking down on those who are business owners. Sometimes, like you're wasting your time. And those who are business owners are also looking down on career people like you are slaving your time. Who has made us a judge over one another? Whether you're a career person or you're a business person, those two routes are fantastic to live the kind of life that you want, to do investments, to make money and whatnot. So how do you make money or more money as a career person or as a business owner? Of course, earned income, which is your salary. I'm just sharing 7 types of income. For those who are business people, business income from your profits, right? Today is not the day to talk about how, as a business person, you need to sort of put systems in place around your business finance so that you can determine whether you're actually profitable, how to put yourself on a salary. Today is not the day for that, but we're just, going straight into how, as individuals, we can expand our financial base and do more investments and build wealth. Of course, interest income, right? When you do some of those investments, you earn interest, dividend income. When you buy shares, you earn dividend, rental income. You do real estate, royalty income. You write books, you do stuff, right? And then capital gains income when you sell assets. These are basic ways whereby, as individuals, career people, or business people, we can make more money. And it's about setting the right systems in place. For example, interest income. It is your money making more money for you. You don't have to be there. You can be on your 9-to-5 job and the monies are coming in. If you invest in real estate, the monies are coming in as income. Royalty, you write a book. I've got about 8 of my books on Amazon. And just yesterday, I was just looking at my bank account. I'm like, I didn't know this money has come in like this. You do the work once and the money starts to come in. Royalty income. I mean, for those who are career people, you can devote your spare time into writing books, into writing whatever, doing courses. And once you put in the work the first time, it continues to generate more money for you. Of course, capital gains income. One other income I would have loved to add to this is partnership income. You have the access, somebody has the time, or they have the skills, and you collaborate. Practical example, qualified as a chartered accountant about 24 years ago, but my passion has been in personal finance and wealth creation. What did I do? I just realized that, yes, even though accounting was my proficiency, wealth creation has been my passion. So I formed a partnership with a friend who loves accounting. She has an accounting firm. So what I do is, I am the marketer. I know more people. I bring people to her to say, okay, you know what, this is a project. And we share the profits. That is partnership income. I trust her. I trust her judgment. I trust her proficiency to deliver on those jobs. Now, I am not there. I don't see what she's doing. All I see at the end of the month is income and share profit. That is an example of partnership incomes where you can collaborate with somebody and you bring skills and talent and access to the table together. So making money is the bedrock of investing. If the money is not there, there's no way you can invest. Do you see? So it's important that we continue to talk about how we make more money. Let's quickly talk about managing money, right? To be honest, it is not how much of money that you make that makes you rich. It is how you spend what you have. In the earlier days of my career, I was always broke. Chartered accountant, scattered finances. I didn't know where my money was going. And I thought village people were after me. I would earn salaries and 2 or 3 days after, I didn't know where my money, I don't know where my money is going. Just like we all say, money is mobile. Money loves mobility. If you don't tame it, it will be everywhere. Francis Bacon said that money is a great servant, but a bad leader. And that's why on a Friday, you would withdraw ATM. And by Sunday, you'll be like, where did this money go? Right? So people, some of us make money, but because we can't account for it, it just looks like, we're not making a headway with our finances. Can I quickly pause to say that making money and building wealth are 2 different things. Anybody can make money using their skills. But if you don't channel the money that you make into assets, you cannot build wealth. So you make the money, you then channel them, you convert it into assets, into real estate, into bonds. That's when you are building wealth. So there are a lot of people who are making money who do not have the capacity to build wealth because they spend their money. So how do you manage your money? Budget, save, set goals, and use apps that will help you track your money. I like what Mr. Esun said earlier on about printing out your bank statement. Sometimes when I consult one-on-one for people and say, I don't know where my money is, I didn't make money. I say, print out your bank statement for 1 year. And they realize, oh, 147 million came into my account. Where did it go? Because you are not actively managing your money. Now, let me go into the last M, which is multiplying your money. I absolutely love this. The skills for making money are different from skills for managing money and the skills for multiplying money. So thank you to EcoBank for a webinar like this that brings, the technical aspect and the practical aspect into multiplying our money. If you want to go far and really build wealth, you need to learn about investments. It's not enough to make the money. Saving money, leaving your money in your bank account will not help you build wealth. Building wealth is long-term, requires knowledge, requires constant tracking. At the beginning of the year, you must be able to say, what is my net worth? What are the things that I own versus the things that I owe? That's your net worth. Oh, last year I had stocks, I had bonds. During the year, I sold some. What is left? You must see, you can't build wealth passively. You can't just say, in this Nigeria, we will build wealth. No, you have to be intentional. So when I see people say, we will build wealth, but those who are wealthy, you and I, right? They're wealthy people. They're intentional. They monitor. They work with advisors to ensure that, because once a millionaire is not forever a millionaire, things happen, inflation, devaluation. So you must be intentional. What are some of the things you can invest in? Stocks and equities. Yes, consider your risk appetite, bonds, fixed income securities, real estate, cash and cash equivalents, mutual funds, and of course, commodities, gold, agriculture. Like I already said, your income determines your investment, but don't jump into all of these things just like that. Build on what you're hearing here. Take a course, press in, dive in. I want to understand what cash and cash equivalents mean. I want to understand real estate. I want to understand bonds. I want to understand how I can diversify my portfolio based on my risk appetite, my goals, based on my current income. And by the way, investment doesn't mean you have to start with a lot of money. That's one of the reasons a lot of people don't invest. I don't have a lot. These days, there are mutual funds that you can start with 5,000, and then you graduate. Then you do bonds. And then depending on your age, there's no time to go into that. And then you build a portfolio and you continue to build and build and build and build on that, right? Diversification. I am aware that EcoBank has quite a number of good products that can help you with investing. So after this webinar, please reach out. And I believe that they will also provide information, treasury bills, bonds, euro bonds, fixed deposit, treasury bills, high yield savings in local and foreign currencies, and the EDC money market. So find out and see how you can plug into that. As I start to wrap up, I know Mr. Ezo has given us all the technical things, what inflation is saying, what the interest rate is saying. Listen, all of these things will come down to the practical things that you do. Number one, become financially literate. Read books, take courses, join financial communities. Men, sometimes we all put our money in the things that excite us. But it is shocking to realize that people don't prioritize knowledge about money. You just think that money is something you can wing. No, here is money. I'm a banker. Oh, I work in financial services. Oh, I understand. You would realize that if you're not intentional, you can't wing anything. The money will come and it will go. At Smart Stewards, where I'm the founder, we have tons of courses. We have the 6 weeks course that will teach you the make, manage, multiply money principles. And we have other plans. But what I'm saying is read. You want to become wealthy, understand the dynamics. There are 2 books I want to leave with you. My book titled 40 Frugal Rules for Your Journey to Financial Freedom, as well as The Psychology of Money. Those 2 books will instantly metamorphose your knowledge about money. Create a wealth dashboard. From today, go and sit down. What do I own? What are my assets? Where do I want to be at the end of the year? Be intentional about transforming your income into assets. You have to be intentional. Make sure that from your salary, from your business profit, every month, you are transforming at least 30% of your income, or 20, or whatever works for you, into investments. That's how to build wealth. And then monitor it every 6 months. Okay, at the end of this year, these were the assets I had or investment. Now this is what it is. Create a wealth dashboard. Of course, build a legacy plan. Don't just earn. Prepare for succession, impact, and transfer. My closing message: you are not waiting for the future, you are building it. And the truth is, nobody is going to build it for you. The government cannot help you because the government cannot even help themselves. Remember what I said about personal economy, national economy, and global economy. Even the government is looking, I mean, there are some, I hear that treasury bills are being released, right? The government is actively raising money at retail levels and institutional levels. Why? The government is looking up onto us as well to fund their work. If that is the case, do you then think that the government has capacity to help you? Well, yes, macroeconomic policies, enabling the environment. Until we have all of those things, your financial future is in your hands. You have to take it more serious. Whether career or business, it is time to think big, act smart, and build intentionally. Wealth beyond 2025 will belong to those who plan for it, starting from today. Call to action: define your 3 financial goals for 2025. What are the things you want to do? Commit to learning one new wealth building skill this quarter. Come and join the Smart Stewards Academy and learn about finance. And then connect with 2 people who will challenge your financial mindset and help you grow. I've got 2 books for entrepreneurs. Real Profit, you'll find it useful. 40 Frugal Rules for Your Journey to Financial Freedom is my best-selling book on personal finance. You will instantly learn about how to channel your resources. And as Smart Stewards, we recently launched our WealthSync app. Look out for it, and you will find it useful. And of course, I talked about Smart Stewards Academy. Thank you for listening, and I hope that you have learned 1 or 2 things.
Wow. Wow, that was truly insightful and empowering. Thank you so much, Sarah, for sharing such practical wisdom and real world strategies on building wealth. You know, what does stand out for me is how you break down the complex world of wealth creation with such clarity and practicality. And that is what I've known you for. You know, I wanted to go off script before because I know you personally. I've been to your workshop, webinars. You know, I receive emails from Smart Stewards, and I consider you even a mentor from afar. But you know, thank you once again. You know, listening to you, it has always been a pleasure because you know how to simplify a whole lot of financial jargons. Let me say that. And thank you so much. And we have a lot of reactions. We have a lot of reactions in the chat box. I'm sure everyone listening has taken something they can immediately apply to their financial journey. So let us keep the momentum going. We'll move straight rather into the question and answer section. So if you haven't already dropped a question, please, this is the time to do that so that our speakers will have time to react to them. Because we don't have much time. So you can quickly drop your questions. And so the first question will be for Mr. Olukunle Ezone. So, Mr. Kunle, are you there?
Yeah, I'm here. I'm ready.
Okay. So the first question is saying, stock sales off is worldwide. I think that was when you were reacting to you mentioned stocks. So it says stock sell-off is worldwide, and some of it is as a result of shorts. It is temporal. What is your reaction?
Okay, yeah, thank you very much for that question. Yeah, I do agree with you that once stock sell-off is global, right, and again, it's a reaction to whatever is happening globally. So it's depend on. So it's more like a panic sell for people. And so my take here is to say, depending on your holding horizon and your investment appetite, kind of risk you are ready to take. So what we see today is that people are dumping because they do not know how long all of this madness will continue, if I may use that word. So the idea is to say, oh, let me sell because I do not know how deep this seller will be. So, but if you are a long-time investment someone with a long-time horizon, then you can afford to just wait the sell-off and see it through. So if that happens 1 month, 2 months, 2 weeks, the market becomes very clear. So there's clarity around pricing and what have you. But if you are someone that is a short-time investor, right? You are not willing to wait that long so that people don't continue to dump on you. Then you want to sell off, cut your losses, and move on. But like you said, globally is happening. Every economy market is facing a sell-off. But like I said, what is your horizon? What is your appetite? Are you a long-term investor or are you a short-term investor? So this will determine your holding period. So again, like I said, it's temporal, it's a panic sell, but your holding period determines your strategy. Thank you.
Wow, awesome. Awesome. Thank you very much for that reaction. Shola, so this is for you, Shola. It said the question here says, how does one determine the best investment in the current economic climate in Nigeria? How does one determine the best investment for one in the current economic climate in Nigeria?
All right, well done. There are 4 things to consider when you are investing. I call them the SGAR factors. Number 1, your current financial situation, how much you actually have to invest, right? And that would be from your disposable income. So if you're a salary earner, you have taken your expenses, done all of those things, how much you actually have to invest. Then your goals, right? I know that investing is meant to be for the long haul, but sometimes you may have specific investment goals. For example, I want to buy a house in 2 years, or I want to do my master's and I want to invest specifically for that purpose, apart from investing for the long haul. Of course, your age should determine what you're putting your money in. You cannot be 55 or 60 and you're saying that, they said there's Bitcoin is what to do right now. Bitcoin is what to do. And then you're going to put your retirement money in Bitcoin. You're on your own. And of course, your risk temperament. Some people are conservative. Some people are aggressive, right? Some people have moderate temperament. Those 4 things fundamentally should determine what you're putting your money in. But I mean, to be more specific, like I already said, what are your goals? If you have a goal to maybe buy a house or pay rent in like 1 year, then you can't put your money in stocks, whereby at the time you need that money, you don't know what is going to happen. You don't know whether the market will be screaming like it is screaming or whether it will be profitable. So your goals will determine. But right now, for me, I would say mutual funds, liquidity to an extent. Again, goals will determine what you're doing. So the mutual funds, well, stocks, as we say, because the market is red, it might be a good time. I mean, stocks are on sale, but the money you put in stocks are money you don't need right now. You are ready to put the money in for the long haul, right? So I think for me, I am currently doing a lot of cash and cash equivalents and bonds, and then stocks, just buying some of those stocks on sales. And of course, depending on the money you have, I think if you can do real estate, it's not a one-size-fits-all kind of answer I can give, because our financial situation differs. But mutual funds, plug and play, hedge against currency risk if you can, and all of those things. Yes, I hope that helps though.
Oh, thank you very much. It does. But before you go, there's another question for you, just in addition to that. The question says, how can young professionals with a modest income begin their wealth building journey in today's Nigeria economy?
I love it. That's a very, very good question. And let's be candid. Beyond all the grammar, you want to do this and that. How do you start? Commit to it. You want to build wealth? Start with a decent amount from your salary. Now, sometimes it is not by the amount, it is by the consistency. One thing we don't realize about investing and personal financial success is that it is more behavioral than the action. Sometimes if it is not ingrained in you, if you don't embrace it as a lifestyle, you will do it today, then next year you haven't done it again. So start with something that is, when you do your budget, like I said earlier on, 50% of your income can go into your necessities. I think 30% for young people who are not married can go into your savings and investments, and then 20% into your need to have. That 30%, look at the investment classes that I have shared. How can you apportion your money? I think the lowest hanging fruit for a lot of us are mutual funds. Right now, mutual funds are returning about 20%, 21%. Plug into that. As you gain more knowledge, go into bonds. As you gain more knowledge, go into stocks. But the pride is that you look at your mutual fund and you be like, I have saved 1 million in 1 year. That gives you confidence to want to do more. So low hanging fruit, start with mutual funds. Get more knowledge, mutual funds and get more knowledge, go into stocks, and as the money comes in, consider real estate investment trusts, and build from there. But knowledge is something that you need, and it will help you do more.
Awesome. All right. The next question will be for Olukunle. So the question says, what is your buyback rate on treasury bills? Or it says, why is your buyback rate on treasury bills higher than the interest rate you give to customers, which effectively wipe off any interest earned by the customer in case of premature liquidation? Do you understand the question?
Yeah, I get it. So thank you very much. And it's a share risk. It's a share risk, and so there's always a sacrifice that one has to pay. Let's assume that you invested into, say, a 180-day instrument, especially with 180 days, and we assume for the sake of this conversation is at 18%. Then in that journey, midway into the journey, 90 days, you say you want to liquidate. Then you can't get that 18% any longer. Somebody is going to share that your risk that you want to drop. So, and the bank is buying back risk from you because it's a risk. When you bought the investment, right, the market dynamics are quite different. So when you are selling, again, the dynamics are different. So the bank that is buying off that investment from you is assuming the risk at a very different time entirely. So they price in all of those risks in taking that decision. And that's why you find in most cases, the buying back rates are lower because it's a share risk that someone is taking off you. So you cannot, in a local manpower, say, oh, you cannot eat your cake and have it. So once you sign for a 180-day journey and you want to cut the journey in between, then there's a risk that someone is sharing with you. So that risk has to be shared. Thank you.
Awesome. So before you go, there's another question for you quickly. The question says, how will the current economic trends in Nigeria and globally, like the USA, impact wealth in the next 5 years? The current economic trends.
Yeah. Thank you very much. In all honesty, what I would say is to say 5 years is a long time to do a prognosis, right? So what we do most times is to say we'll do a 1 year prognosis, come back to review it, and then give another 1 year. Because in 5 years, a lot of things will have happened. There will have been change of government, there will have been change of policy, and what have you. Today, globally, there's Trump in US, right? And there's Xi Jinping in China. In another 4 years, these two gentlemen will not be in office. Same thing applies to Nigeria. So government comes, government goes, and they come with a new dimension, the policy and what have you. But what is constant is those investment products. So I would advise to say, whatever investment you are taking, right, you take based on current dynamics, right? Market dynamics today is what drives investment today. What happens thereafter is quite different. And that's why most of the time what we do, when we're advising clients that want to invest in a long-term bond, we take a long-term horizon looking at inflation rates and exchange rates, and we use that to determine. So for individuals that want to do on a long time in 5 years, is to do a scenario analysis that give you the best time to exit and best time to buy. So in 5 years, I would say, I want to buy a bond, a government bond, that factor in inflation rates, right? Because, we always say that inflation rate and investment in fixed income, they are inversely related. So again, 5 years is a long time to do a prognosis, but I would advise that we do a 1 year prognosis, come back after 1 year and do another analysis based on changes in macroeconomic environment, which again are not static, right? So I would advise that a 5 year is a long time to do an investment, but if you are interested in going that long haul, perhaps you want to do a 5-year bond, that you constantly do a reassessment of market environments. Thank you.
Thank you. That was awesome. If you're loving this webinar, can you just do some reactions? And just let's see your reactions if you're loving this webinar. Personally, I'm loving the whole answers, because if you look at how the webinar is going, there is a technical angle to world building, and also there's a practical angle to it. So you can see the blend. Okay, we are seeing your reaction. So the next question is for you, Shola. So you spoke about the three angles to money: making money, managing money, and also investing it right now. So the question is saying that how can you balance savings, investing, and spending wisely in an inflation-driven market? Then he went on to say, how do you recommend that people overcome debt while still trying to build wealth? Can I take the question again? How do you balance saving, investing, and spending wisely in an inflation-driven market? How do you recommend that people overcome debt while still trying to build wealth? So it's a 2-in-1.
Thank you. That question requires a masterclass, but I will try and do justice to it very quickly. Let me start from the second question. How do you manage debts? Vis-a-vis building wealth. We find ourselves in debt sometimes for reasons best known to us and for circumstances beyond our control. But one thing I like to tell people is when it comes to debt repayment, it is an obligation to the past. When you are paying debt, it is an obligation to the past. Saving and investing is an obligation to the future. So if you find yourself in debt, you must be able to manage it in such a way that as you are repaying your debt, you're also saving. Because what happens is you will finish paying the debt and then, excuse me, you will find yourself in another debt. So you have to sit down to carefully look at your resources. Ideally, excuse me, 1 minute. Ideally, you shouldn't be living in debt. You shouldn't be borrowing for consumables. But, this is not the time to start to ask what kind of debt it is. But what I'm saying is, as you pay your debt, you're looking backwards. Saving and investing is looking forward. So sit down with a coach to help you analyze your resources. How much of my debt can I pay on a monthly basis, and at the same time, save and invest? It is important. Like I said, if you don't do that, you realize that you keep borrowing money and you never come out of it. Debt is such a bad trap. It's not something you should get into. So pay your debt, but save at the same time. And that leads me to the first question. How do you balance saving and investing in this economy? Since when I was young, was when we had austerity, SAP, this and that. Things have not significantly gotten better over the years. As long as there is the world or life exists or the world exists, there will be inflation. There will be devaluation risks. There will be so many things. So as your personal economy, in your personal economy, it is your responsibility to juggle these things. Unfortunately, like I said, you have to help yourself. And one of the ways to help yourself, because I know that finances could be quite restrictive, you have so many expenses, and it looks like, how am I going to come out of this rut of just making money and then spending it? Make more money. That's one of the easiest ways of sort of alleviating your financial stress. And that was why during my presentation, I talked about different types of income that you can make. So the thing is, how can you extend yourself and expand your income beyond what you currently have? There are some expenses that you can never, when you say, let's cut down on expenses, I'm not a finance coach that will say, cut down on expenses. when inflation is literally hitting back and forth. So there are some expenses that you cannot cut. Your house rent, your children's school, everything is literally going up. If your salary is not increasing, your business profit is not increasing, then you need to say, how can I make more money to augment the difference? But as we say all of those things, it is important. If you don't save, if you don't have emergency funds, if you don't invest, there will be nothing to fall back on in the future. So I get it that it could be hard, but you have to balance things out. And that's why I said, no matter how small it may look, invest. And typical budget is plan your money. Budget is not something that, I know a lot of people don't want, they know what is there to budget, but it helps you. I tell people budget at least once a year, because it's not in budgeting every month. It's about tracking. So budget, how much am I actually making? Interact with your finances. Some of us are having anxiety because we are not sitting down to say, okay, how much is my salary? How much of it is going into my necessary expenses? Okay, can I conveniently pull 20% out and start to save? If you don't do that, the money is never enough. And I tell people, treat saving and investment as a bill, like your NEPA bill, because if you don't do that, you will spend, and then you will say there's nothing to save. So as you earn your salary, get your profit, whatever it is, map things out, including savings, and then stretch yourself. Listen, whether you save or not, the money cannot be enough. It's never enough. So you must, and you know that savings and investments have the potential of returning economic value to you. So you have to push yourself into doing that, but particularly into seeing how you can stretch your income. There's an extent to which you can cut down your expenses. I think it's easier and it is better to stretch your income so that you can have more money to save and invest and live the kind of lifestyle that you want. I hope that helps you.
Oh, that was fantastic. Thank you very much, Ma. So there's another question for you. It's also 2-in-1, and this will be your last question. Then I'll go on to Olukunle. So the question is, can Mrs. Shola dwell a little bit on mutual funds, and will she recommend it for short-term or long-term investment? Please, how do one find investment that are higher than the current inflation rate? So those are 2-in-1 questions. But before you answer, I would like to mention that we have a mutual fund product here at our sister company, EDC Fund Management. So it's in-house. But the question is for you, Ma, that can Mr. Shola dwell a little bit more on mutual fund, and are you going to recommend it for short-term or long-term investment? Then the second part says, how do one find investment that are higher than the current inflation rates?
Absolutely, I love the question. Mutual fund, in my own opinion, is one of the lowest hanging fruits in the world of investing. Most times they are the entry barrier is very low. EDC, I don't know what your mutual fund rate is, but most of the funds are around 5,000, 10,000. Now that's something you can close your eyes to starting. So after this call, check in with EDC to say, I want to start a mutual fund. Most times also they are close-ended in the sense that you can add money today, right? Add money tomorrow, keep adding, and it builds up. And for money market mutual funds, in most cases, because I know there are different types of mutual funds, but money market mutual fund is liquid enough, it is accessible, it's open-ended rather. You can add to it and you see your interest literally moving up. I think mutual funds right now do about maybe 20 to 21%. I am not sure. Maybe Adekunle can provide more details on that. But for anybody starting their investment journey, listen, mutual fund is a must-have for you. Short term, yes, you can use it for short term. Long term, as you gain more knowledge, you can decide, oh, should I pivot from cash and cash equivalents into fixed income like bonds, right? But if you are new to investing, why not? Follow EcoBank, find out about their fixed income products, their bond products, Euro bonds. So you graduate, you start with mutual funds and you do fixed income. Then you do Euro bonds to hedge against currency risks. And from there, you can move on and on and on. So to directly answer that question, I believe that mutual funds is good in the short term. For me, more in the short term to help you aggregate funds And as you gain more knowledge, you can then start to pivot into other asset classes. Yes, in my opinion.
Thank you very, very much. That was very insightful. Thank you for giving clarity to all these questions. So before I ask Olukunle the last question, because of our time, we need to round off soon. I would like to encourage all our esteemed customers that there's a link to a feedback form in the chat box. Please kindly click on the link. Will value your feedback. We need them. Thank you very much. So the last question is for you. It says, please, how do one find investments that are higher than the current inflation rate? Okay, you've answered. I said, how do I trade in dollars?
I'm not sure I answered that bit about finding investments higher than the inflation rate. Right now, the inflation rate, as at the last time, was about 23%. Most of the mutual funds that we have are right now in the 2021 region. So the real return is like -2, but it is still better than whatnot. How do you find? Seek information. Call Ecobank. What are your rates on bonds, right? So you need to research. How do you find? Research and ask questions, and you will find. Thank you.
Thank you very much. So Olukunle, the question is, how, and this will be the final question, how do I trade in dollars to maximize income here in Nigeria?
Okay, thank you very much again for that question. And I think I need to put this straight out. Trading in FS is quite regulatory. So we need to get that straight away. The central bank is quite strict with trading in FS. So if you go trade in FS, you have to be a registered corporate organization in Nigeria. And mostly banks are the ones that allow to trade in FS or the Bureau de Change. So if you are not in that category, if you are not a bank and you are not a Bureau de Change, it may be quite difficult to trade in FS. But what you can do basically is to, if you are interested in dollar-denominated investments, Ecobank is a platform that offers that opportunity, right? We have the Treasury Department that does investment on behalf of clients. So you can invest in either Eurobond or a dollar-denominated investments, right? Maybe issued by Nigeria, by sovereign or by a corporate organization in Nigeria. So, but beyond that, if you want to trade as individual, it's quite it's a tough call to make because CBN does a lot of regulation around exchange rates. So it is tough as an individual to trade, but you can trade through your bank. Thank you very much.
Awesome. Thank you very much for that answer. So we have come to the end of the question and answer section. I'm sure that it's been very engaging, and then your notebooks are full. Thank you once again to our speakers, Ezun, Olukunle. We appreciate you. You're one of our own. Thank you very much. And to the amazing Shola Adesakin, keep doing what you do. We appreciate you. Thank you for simplifying investments and making it more practical. So at this point, I'll be bringing back my co-moderator, the amazing Uju. Over to you.
Thank you so much, Kunle. Thank you so much. This has truly been an insightful and inspiring session. Truly, I have learned a lot. Wow, I have learned so much about personal finance, money management, and I now look forward to the future on how I can make these changes in my personal life, how to manage my money, how to relate it with today's economy, and so much more. Truly, I'm definitely going to be richer in 2025 and beyond. Look out for me. Anyways, thank you so much to all our guest speakers for those insightful and impactful contributions, and to everyone who shared questions during the Q&A. Thank you so much. You have been part of this enriching session, and I'm sure that we can all agree that it's been a session worth remembering. If you think that this has been a session worth remembering, please react, give us a thumbs up, give us a love emoji, whatever. But this has been a truly enriching session. If you have more questions, please drop them in the chat box and we'll definitely find a way to respond. To officially close out today's impactful webinar, please join me in welcoming a delectable woman, the head of consumer banking in EcoBank, Miss Adiola Ogunyemi, to give the vote of thanks and our closing remarks. Over to you, Ma.
Thank you very much, Obianuju. I don't know about the delectable part of it. Good afternoon, everyone. Thank you for joining us in this program. We believe that we've been able to set the tone for how we can help to support you in beginning that journey. And if you have already started it, how we can help you to enhance building wealth. Like the various speakers have said, it's not a one-day thing. It is really progressive. And we at EcoBank we're available to help you to make those decisions. We have a wealth management team that will help to guide you in deciding, okay, what is your strategy? How do you want to save? One thing that is very important in this conversation is that today is a good day to start. And 1 kobo is a good amount to start with. Being deliberate is really what we need. You know, Kunle, for example, talked about understanding the current macroeconomic environment. In addition to that, if we actually look at the environment, we may think that we don't have enough to start saving. You know, like Shola also mentioned, today it's a bit challenging to find investments that beat inflation. But that's only because you're looking at today. Investing is long-term. You build up over time, over the years. You build up for different purposes. You could be building to buy a house next year for your children's school fees, but you also have to make sure that you're building wealth long-term for your retirement. You need to make sure that you're earning enough passive income that will help you to weather those storms, which, whether we like it or not, we will all experience in the course of our lives. So that takes being deliberate. That takes taking specific actions. For example, you may think, I don't have enough to save. There will never be enough to save. One of the stories I like to share was when I started my banking career, and somebody asked me to buy a shirt for 2,500. That's to tell you how young I am. And I was like, is it made with gold? Today, if you ask me to buy a shirt for 2,500, I may be tempted to say, is it good quality? So what am I saying? Your tastes will change as you earn more money. So you are never going to be in that position where you have enough. You will always find something to do with the money. So here's the approach that we would always suggest that you take. First of all, you determine what you are saving. Whether it is 10%, 2%, be specific about that amount. Then work what you spend into what you do not save. Because if you approach it the other way around, where you are spending first and it is what you have left that you will save, you really will never get to that point, particularly in the place where we are in Nigeria today, where inflation is high, cost of living has exploded, and there's the little matter of family and friends. I don't know about you, but there's so many people that depend on my salary that if I'm not
Ma, you're muted,
your mic,
ma.
please. Okay. Your
You're
mic,
muted.
please.
Okay.
Oh dear, do pardon me. Okay, so I am going to start again, and my apologies. So thank
No,
you
just
everyone
few
for.
minutes, just less than a minute.
Oh, right. Okay. So I'll just continue by saying that we do need to be deliberate about saving, and at EcoBank, our wealth management team can help guide that conversation. We'll be reaching out to everyone after this meeting to help set up those conversations. It can be a bit overwhelming to understand, okay, what should I be looking at? What are the opportunities? What is my risk appetite? That is why we are here to support you in that journey. And I want to encourage you to start early and start somewhere. Because if you don't take those actions today, tomorrow, I was looking at some statistics, for example, and it says that over 70% of lottery winners, for example, lose that money within the first 2 years. Now, some people win hundreds of millions. What does that tell us? It tells us that it is really not how much that comes into your pocket that matters. It is the investment decisions, starting with the savings decisions that you take. So you may think, okay, I'm earning 100,000 today. I don't have enough to save. When I earn 1 million, no, you will not save if you don't really build that discipline today. So going from this conversation, there's a lot to unpack, but that's why we are here. We will guide you to grow your investments and to build resilience beyond 2025, because it really is not a 1 year thing today. And, you know, just to borrow again from one of the things Shola said, there has never been a time when there was not always something happening. Indeed, I hear people say, oh, 2020, 2022, 2023, this was what the exchange rate was. In another 5 years, we will be looking back at 2025 and saying, oh, things were even good then. So you have to be deliberate. You have to think long term, and you have to be disciplined. So I would like to close by thanking you all for joining us, and let's keep the conversations going. We will keep being available to answer questions even beyond this meeting, and we look forward to seeing you in subsequent engagements and to supporting you to grow your wealth and to build resilience beyond 2025. Thank you all for your time today.
Thank you so much, Ma, for that wonderful vote of things. I hope we have all learned. And that brings us to a close for today's webinar, Building Wealth and Staying Ahead Beyond 2025. Thank you all so much for joining. We'll reach out to you and we'll see you next time. Bye.
Bye.
Bye, everyone.
Bye-bye, everyone.